there has to be the conditions in place so capital will want to come in.
Yeah.
But there also has to be the regulatory structure that allows for flexibility. Over time, if we have climate-related issues, people are going to have to make hard decisions about that. There's none of that flexibility that's available. We don't have a breadth of solutions. So it's take it or leave it. Here it is in a box. It is absolutely crucial that there's an advocacy and a promotion of both here are the conditions that are required to have a healthy and stable insurance market, but also here are the conditions that are going to allow the innovation that's going to have to occur.
Yeah.
Right? The different kinds of products so that when it does get tight, people have options on how to make it economical. Hi, I'm Nick Lamparelli, and this is the future of insurance.
Nick, it's good to sit down with you, like in person, sit down with you.
I know.
This is do it too much.
Fantastic. Like ever since we left Boston, I like I just don't get to see you as much. So
well, and I see you much more, not that it's that much, but much more now that we don't live near each other. But it's never like we're in Las Vegas just after ITC, the morning after. Shout out to Dave Wexler, the InsurTech Rap Show for people watching. Dave, put this t-shirt.
And I have Ben Akiva. So I'm supporting.
And Ben Akiva's in this book. We got the entire Future of Insurance series here, and we both have hats, but we're not wearing them. So I'm sure a lot of people know who you are, but give us the high level, and then you've been up to something more recently that I want to talk about as well. But we're going to talk ITC, Hurricane Otis, and whatever other ramblings we get into, which is kind of par for the course for us.
So Nick Lamparelli again, and I am the managing partner of Insurance Nerds, which is a content-oriented media and marketing site for insurance. And I'm now just recently the co-founder of an organization in Florida that's a nonprofit. That's the Insurance Advocacy Forum of Florida, which is, as the name says, an advocacy group, but it's an alliance of carriers, brokers, reinsurers, reinsurance brokers, insurtech companies, insurtech professionals, claims professionals. And the goal is to advocate and promote for a healthy and stable insurance market. So it's not pro-consumer, it's not pro-insurance, it's what are the conditions that are required to have a healthy and stable market, and not what's happening in Florida, which is really a hard market, quote Bob Frady. But in some areas, insurance is becoming completely unaffordable, right? And a lot of it just has to do with the litigation, and there's a full court press going on that it is not the litigation that's causing it. And as an insurance professional, I want to make sure that we have someone who's perpetually in an outbound way advocating for, not for the insurance industry, but here are the conditions that are required. And Florida has not met those conditions for like a decade. And we're reaping what we sowed. But we should drift towards the regulation and the legislation to put in the conditions that will allow capital and reinsurance capacity to come in.
Yeah. And I do think as Florida goes, so shall the country, as climate change and cat exposures continue their march forward, because Florida's just like the amplified future.
Ground zero.
Yeah. So and this is why, like when I told the Kin story in the second book, that was like, we started in Florida because insurance is a dinner table conversation, like what your premium is. So we know we can get into not chasing down, but chasing appropriate rates. And we expect the rest of the country at some point in time will look and feel, or most of the rest of the country will look and feel the same way, maybe not for wind, but for other climate related reasons. So if we don't do this right in Florida, that will be the whole country. And I appreciate what you guys are working on.
Yeah. Well, I mean, I think California is starting to see the ramifications. So California is where Florida was 5 years ago.
Yeah.
And they just had an executive order to allow for cat models, which had never been allowed for wildfire, which is, to me, mind blowing.
Yeah.
But also the ability to expense reinsurance costs.
Yes.
Like California never allowed that, which is just, again, mind blowing, because that's a massive expense for a carrier, and that they can't deduct that. So we're balancing not only the climate related issues that we're facing, but a regulation system that frankly has not been friendly towards the appropriate rate. I'm not getting to like where carriers are making excessive profits or anything like that, but we go in these cycles where if the carriers are losing money for year over year over year, there's only two decisions they have to make. Do we stay or can we raise rates and kind of make it back? If you're not allowed to make it back, that's a simple option. You got to leave.
Right. Well, so you said the word affordability, and that's been a key word in a lot of conversations I've been having, where it's not affordable for carriers to offer coverage, and if it was, then it's not affordable for consumers to buy it, commercial or personal. And so yes, California is absolutely at that point. Rates are up 40% for some carriers, and it's still not enough.
Still enough.
Florida, same kind of thing. But then you're going to move into a place where if you can get the rate, great, except then people can't buy. And when you're talking about homes, then people lose their house because they can't have their mortgage. They're in default. That's where it starts to become not just an annoyance or something you get ads on TV from attorneys about or whatnot. It's like I think for a politician, that's a catastrophe. And I do think there's a chance that that's coming if we don't figure this out quickly, because everyone's just going to pull out. And the ones who are left are like, well, what are we supposed to do now? We can't eat all of this exposure.
No. And so like there has to be the conditions in place so capital will want to come in. But there also has to be the regulatory structure that allows for flexibility, because I agree with you. You take a standard HO3 policy. There are a lot of coverages built into that. Right. And over time, if we have climate related issues, people are going to have to make hard decisions about that. And I think what they'll want is, if you're in Florida, you're going to want the wind coverage. Right. And you might want to forego some of the other ones. So there's none of that flexibility that's available. We don't have a breadth of solutions. So it's take it or leave it. Here it is in a box. Take all of these coverages. It's like buying, 500 channels in cable, and you only use 4 or 5 of them. Like, what am I paying for? Kind of thing. So it is absolutely crucial that that there's an advocacy and a promotion of both here are the conditions that are required to have a healthy and stable insurance market, but also here are the conditions that are going to allow the innovation that's going to have to occur. Right. The different kinds of product, parametric, stripped down HO3s and things like that, so that when it does get tight, people have options on how to make it economical.
So I think that's critical, and that's where I want to transition to talking about ITC, and that's where I was going to say, well, what do we see? But that's actually what I didn't see versus some other years. Is in the past I saw more InsurTech, like MGA carrier, whether it was not necessarily exhibiting, but speaking and walking the floor. And that was about pushing product forward, hopefully, not always. But you and I have talked about solo, for example, like right now with a tornado product, but looking at how to use a parametric cover to supplement or deal with the carve out.
Fill in a gap.
Right. And so when I hear people in Florida, like, well, we're going to buy a homeowner's X wind, it's like, well, what are you buying? Because yes, there's
the
water
fire.
Damage, but in Florida, unless it seems like Disney is in this bubble that they never get hit by anything, but the entire rest of the state, basically, like, it's primarily a wind exposure. I get you can't afford it, but so if you were going to buy that homeowner's X wind so you can have your mortgage, wouldn't there be value in some kind of parametric cover that's not a full indemnity policy, but at least you're not completely exposed and it's affordable? And that's like those sorts of conceptions which we don't see in the market yet.
Well, even with wind coverage, there's a 5 or 10% deductible.
Right. Which is not affordable for most people.
And so they're damned if you do, damned if you don't, because even if you buy the policy, which can be extremely expensive with that huge deductible, the higher probability of what's going to happen is, if you have a loss, it's going to be in the deductible. And how do you afford that? Right. So the probability of like having there's a broker friend in Naples, where I live, who's private client. He's like, Nick, this can't keep going on. I have a client who has a 6-figure premium. Right. 6-figure deductible, had a 6-figure loss and got paid nothing. Right? Like,
It's just, but like, pause on the first number you said. How many people have even contemplated on personal lines? 6-figure premium.
it's mind blowing.
Yeah.
It's mind blowing. So we're talking about a multi-million-dollar home, which
Yeah.
we have a lot of those in Florida. But that person is frustrated. That person is saying, "What is the economic value of insurance?" And my broker friend was saying he has several clients like that who are threatening to self-insure.
Yeah.
And he's
Well,
like,
I mean, effectively, he just did, but he paid a ton of money to do
he
it.
paid a ton of money to
Yeah.
self-insure, so it was just a bad economic
Yeah.
value for that person.
Yeah.
And what are the conditions that need to be in place for my broker friend? He's like, well, if they're going to self-insure, right? Why are there no captive vehicles? Why are there no
That's interesting.
innovative vehicles for them?
How do we enable that, like we do in the commercial lines?
Exactly. Right. And so I think there's been a lack of that kind of innovation.
Well, so all right, so now my wheels are turning, which is what happens when we talk. Yours turn and mine just like eat a little bit. Carriers who are pulling out of markets, if that's their strategy, eventually they get to a size where that's not what they were designed to operate as, and it becomes unviable as a business.
Mm-hmm.
Doesn't matter how much more they write in other states, they can't, like, not to name names, but take a State Farm kind of, and I'm not saying State Farm's doing this, but let's take that scale. Imagine them in like 6 states. That doesn't work.
It won't work.
They can't contract their staff, their systems, their real, like, all of that can't contract sufficiently to support being a writer in a tenth of the country. So what happens with that mechanism, that machine you've built up to support a much larger business? And I've had this conversation like with med mal carriers where their commercial market's going away because it's self-insured, it's moving to captives and that sort of thing. And then they look at administering the business for those captives or for those self-insured entities and say, well, it's not, the returns aren't as good as they would be if we had the premium. So yeah, but you have the machine built, and your other option is you have no returns. So why are you looking at it as like, well, they're not as healthy? I understand that, but you're not reshaping your business to support a much smaller entity. You still have this machine. It's generating nothing. Why wouldn't you think about, is there a commercial solution for us to offer out what we've built so that we can still be viable? And yes, the economics are different, but that's true of every different kind of business. Doesn't mean they're bad economics. It's just a different structure, and you haven't solved for it yet.
Yeah, I think of some conversations I've had with mutuals.
Yeah,
and they it has taken a while, but some of these mutuals are now contemplating we need E&S paper.
Yeah.
Within our organization, because first we're leaving a lot on the table. There's a mutual in the Northeast that I'm familiar with, who's extremely well respected, but they have very strict underwriting guidelines, and the type of demographic that they're set up for.
Yeah.
They have to bypass. They have to allow business to kind of go by them,
right? Because
it's 2 miles from the coast.
Yeah.
And in the Northeast, yes, there's still coastal risk, but it's not Florida.
Yes.
Right. So those are the business opportunities they absolutely want.
Yeah.
And they're not set up for.
Yeah. Right. Not set up for is the key.
Yeah.
It doesn't mean it couldn't be. It's just they're not.
Yeah. And you and I have talked about this a lot. Insurance only works at scale.
Yeah.
Right. So, man, like that, what a thought experiment like that is, of State Farm having to contract.
Yeah.
Like in every possible way, they are not set up for that.
Yeah.
Right. Including their balance sheet.
Right.
How do they justify having
the hardest part of it?
How do they justify having such there'd almost be like they'd have to be like a class action or something, because that's the policyholder's money.
Yeah, well, the state, like Illinois, would force the Attorney General or Secretary of State, I guess, would force them to dividend out.
They have to.
Massive chunk of their,
and then they'd be starting over. Like they would never want to do that.
The return on capital would be atrocious. I mean, it would basically be zero if they were up.
Yeah.
And we're not picking on
State Farm.
Exactly. It's not
exactly.
happening. Like,
exactly.
Disclaimer.
Yeah.
But okay, so none of this is about ITC except to say, like, well, I didn't see like this at ITC. I saw a lot of Gen AI. I saw like weather tools and and that's all. And I don't mean that to like belittle any of it, but thematically, like, great solutions, really useful and valuable, but actually there's a more of the existential issue in the industry. I didn't see or hear anything around that, which left me wanting. And maybe it's a sign of where the industry is right now because it's a tough moment. But yeah, what are you seeing?
I saw Gen AI everywhere.
Yeah,
everywhere, and I spoke to someone off the record about it, and they essentially admitted what we all thought about Gen AI, which is like, yeah, we have some, but we kind of have to put the buzzword in because how do we compete for investor attention or customer attention if we're not actively promoting the Gen AI?
Yeah.
Even though in many cases it's not there.
Right.
Right. Like you have large language models, and on a text basis, it's really good. It's good stuff. Right. And I think that's what everyone saw with ChatGPT coming. It's like, whoa, this is amazing. It can write papers for you. It can write papers for you in Shakespearean, dialect, right? But it's not there. And the insurance industry, I think, does have existential qualities today that have nothing to do with Gen AI. Like it is not the solution. It is like, how do you manage your balance sheet?
Yeah.
Gen AI is not going to help you with that. Things of that nature. So I saw a lot of the Gen AI. I think it's a challenge with a conference like this. It's so big that it's hard to. I think it's hard to put your finger on the pulse of the theme or the important themes. And in many ways, for me, it's predominantly more of a networking type of thing. And I think from a networking standpoint, at least, it almost can't be beat. And there are pros and cons because there's thousands of people here. So you hear like, I can get, instead of 20 meetings over 20 different events, I can have 20 meetings in 2 days. Kind of thing. But then there's the alternative, which I think you will understand when you walk anywhere, right? It is difficult if you have a 11:15 meeting. It is difficult to get to the 11:15 meeting because you're walking by thousands of people who are grabbing you by the shirt.
Right.
Like, hey, how you doing? Let's chat. And I have a meeting I have to go to.
Well, and someone's probably in the space that you're at, where you're trying to be, and the person you're meeting with is probably 15 minutes late, and then you have your next 15-minute meeting. So I was asking someone last night. They're like, we had 40 meetings booked, and I was like, oh, that's awesome. How many were no shows? And they're like, oh, like 4 or 5. And I was like, oh, that's actually a really
that's good percentage.
Like your hit rate was pretty good. It's great. Like I ran into someone who I was supposed to be meeting with at the end of our meeting time, and he's like, oh, hey, how are you doing? And I was like, all right, I'm not going to say anything. But like, we were literally supposed to just be meeting for 15 minutes. And you're just like, it's hard to stay on top of the schedule while you're here. Yeah, it's nuts. One of the things that I was wondering about from your perspective is, and I know that's not necessarily where you were at with your meetings, but catching the tone is there's a lot of talk about who was here, who wasn't here, what kind of meetings you're getting. So less on the functional or operating side of the carrier, more like, I think carrier CBCs were still here, but less of like the head of claims, the CIO. I saw fewer like CEO delegations where you'd see the CEO and then like their entourage behind them. I didn't see that for the most part. VCs were talking about the difficulty in both directions. Like people who want to get funding, it's hard to get funding, but they're also having trouble getting LPs to raise new funds. And so it was interesting hearing from VCs who were sort of like, we're doing the VC dance, the next rung up to try to get capital as well. Did you catch any of that kind of conversation too?
Not exactly. I think what I did not see the CEO with the entourage. Right, like you saw in the past. So that kind of disappeared, and it makes sense, right? That it's expensive. Right, to do that, and especially if you're going to decide to put a booth on the trade floor. That's a challenge. You're looking for some of those firms. Like I'm doing mental math and thinking, this is 6 figures just to set this up. Never mind, like get everybody here and things like that. So the challenge is like getting a return on that, and that's huge. I did not see a lot of. I know there were MGAs here, and my guess is that they were probably not necessarily on the trade floor and having side meetings.
Yes.
Trying to get stuff done, getting, talking to capacity
Yeah.
and things like that. So I think it's turned into that. I think it's very much turned into, hey, instead of flying to 5 different cities, we can go to one.
Yeah.
Everyone will be there. We can have a whole bunch of meetings there, kind of level that out since everybody will be there, and then move forward. I think that was the predominant thing I saw, was folks trying to structure those kinds of meetings and being creative about it, not doing it in the conference area, but outside the conference area.
Yeah. I want to switch gears to Hurricane Otis, because I know this is sort of your space.
Mm-hmm.
It's like cat property world. Terrible storm, but one of the things that stood out to me was how quickly it went from tropical storm to Cat 5. It was like
12 hours. Yeah.
Which is crazy. Can you talk a little bit about the dynamics of the storm? What, aside from terrible loss and destruction, my heart goes out to the Acapulco community. That's like, it's tourism based, and they're not going to have that for quite a while. What are some of the things that you think come from that, or what was sort of reaffirmed or discovered in the wake of it?
Yeah, well, I think part of it is we don't fully understand the science of it. So it's not the first time that a storm rapidly intensified. I believe it was Hurricane Patricia at some point, and I don't even know the details of it. So it's not the first time, but you have been hearing more about rapid intensification.
Yeah.
So the storms don't seem like much, but then they get near coastal waters, which is shallower.
Yeah.
So the sea surface temperature, it's not as deep. The water's warmer.
Yeah. And
the warm air kind of fuels it, which in a warmer climate, that's probably what you can expect.
Yeah.
Right. But I don't think any of the forecasts had it becoming anything like it became.
Yeah.
So, science is never perfect, right? So there's still more to learn, and I think there's a lot of research that's going on in that. But if these sort of things keep happening, we have to, the cat modeling firms have to kind of reevaluate.
Yeah.
The models, the catalogs that they're creating.
Yeah.
How do storms behave as they're moving? Right now, I think there's not that rapid intensification that's kind of built in. So this goes back to our Florida problem.
Yeah.
Right? And if the cat model vendors have to tweak their models to incorporate rapid intensification, the loss estimates are only going to go up.
Yeah.
Right? Which means the rates have to go up.
Yep.
Okay.
Yep.
So it's just pretty simple math.
Yeah.
So I think there'll be a lot of work on that, but my expectations are that you'll start to see model losses start to creep up linearly.
Well, and one of the things you and I talked about around the storm was around the building codes, and I know that's an area you've also looked at. Is like roofing materials, roofing construction. I sent something to you that's another building material in place of not plywood, but whatever replaced plywood. That's like the glued together shards of wood. Yeah. That's the technical term, shards of wood. I think that's what Home Depot sells them as. But there's a building code story to this as well. As like mundane as that might sound to some people, it's pretty serious and actually impactful.
Yeah. So, I mean, in the United States and Florida, if you look at photos of Acapulco, right, it's you have these high rises that just look like a nuclear bomb went off, right? Like they are just shredded.
It's like hollowed out,
right? And when you speak to folks who are familiar with the market in Mexico and how buildings get constructed, those buildings are, and a lot of those buildings are fairly new, right? Which would be an underwriter's dream.
Right.
Imagine those submissions coming to you. This building was built in 2019. It's a $125 million building, but look at it. It's gorgeous.
Yeah.
Unfortunately, that building was engineered for earthquake.
Yeah, that's their primary exposure.
That's their primary exposure. Acapulco does get tropical storms, but it's not Florida.
Yeah.
Right? So it had been a while since they had something that serious. So there was not engineering. Like the glass basically blew out on those buildings. And I don't think you'll have a total loss, but it's going to be a loss in the tens of millions for
Yeah.
$125 million building that gets hollowed out. That could be a $75 million loss just for property.
Yeah.
Never mind the lost income.
Yeah, the BI on it's
It's good, huge, right? Because they essentially have to rebuild the entire building, which could take a year or two.
Yeah.
To do.
And you're going to have a rush on demand.
Yes.
And there's already supply constraint.
Yeah.
So it's like it's everything hitting at once.
That building in Florida would have completely survived.
Yeah.
Right? Like that building in Florida would have
built to code.
Would be, as long as there were no flood damage, it's likely that they would be open within a few days, kind of thing. And so the premium that has to support that kind of business is so much lower.
Yeah.
But it also goes to show you like how important building codes are. Like the best loss is no loss.
It's like 5 mile per hour bumpers on an auto. Like a tropical storm, you might have some paint scuffing, and that like it should survive. It's when you start crossing the threshold from the impact force where you get crumple zones that like, yeah, it's going to take it. But they didn't even have 5 mile per hour bumpers in that respect.
No, not at all. And so,
I mean, not that like Cat 5 storm is 5 mile per hour, but
Florida building codes as of just recently, for homeowners, just recently, the Miami-Dade building codes have. This is the first time, and this is just like 2 years old. The entire brand new construction, the entire structure has to be Cat 5 status.
Yeah.
Like that's the first time. Except for the roof, Cat 5 status has been in place now for over a decade in South Florida. So it just goes to show like the push towards building codes has a massive effect on insurance.
Yeah.
So in our conversation, like we're coming full circle.
Yeah.
In our conversation, in a warmer climate, right? Let's say in an area where insurance is going to struggle to kind of keep up with what's happening.
Yeah.
One thing we can do to kind of keep up faster, we can move faster with building codes. We can move faster than the climate's changing.
Yeah.
Right. Which is probably, I think, the prudent thing for us to do.
Yeah.
The lessons are everywhere.
Yeah. I had a conversation with a partner, McKinsey, about the auto equivalent of that, which is the safety tech in cars. As that's increasing, we should see frequency and severity dropping, but because distracted driving related issues are impacting losses faster than the safety tech can control it, losses are getting worse. We don't have the equivalent of distracted driving in a house sitting there or a building sitting there. So we actually can just benefit from better regs, better building codes specifically, but building materials and all of that. We don't have the same negative force subtracting from the benefits that it brings. So we actually can just get it offset.
The only thing preventing us from moving in that particular direction is, a change in the building codes does make the building more expensive.
Yes. Yeah.
But I think Florida, again, shockingly, Florida's a leader here. There's not too many things that Florida is like you can look at and say Florida's the role model for this, but they are the role model for this. After Andrew, there was the same pushback on building code changes because it's, hey, these buildings are not going to be affordable, right? But all of a sudden, the supply chain behind it adapted, and now there's a gigantic development being done by my development, and I can't believe how quickly they're putting these homes up, and these are, basically masonry, reinforced masonry. Structures, but the supply chain's all done, right? So they know now how to stand it up real quickly, like they would in the Northeast with a wood frame home.
Right.
They can make those homes just as fast. Now, and they're built for a Cat 5.
Right.
Which is just unbelievable. So we have the evidence that you can ramp up the building code changes, and the infrastructure behind it will adapt to it.
Yeah. Well, I think what better note to end things on, forward thinking, than building codes. It's
amazing. Like we all talking about generative AI and all of these things that can help us with our operations to make insurance better. And the one thing I think we fully have control over is that kind of risk management.
I think it's always good to sit down with you.
Awesome
for some time.